What's up guys, in this video we're going to be going over one of my personal favorite ICT strategies. It's very easy to follow and I'm going to walk you through everything you need to know in this video step by step. One thing I do want to say is there won't be a setup every single day with this strategy, but when a setup does show, we're going to be selective with our trades and the risk to reward on these trades is going to be absolutely crazy, and I'm going to show you a secret hack when I'm showing you the strategy. Okay, so first things first with the strategy, we're going to be aiming to catch the high or the low of the day with the strategy. We're going to be entering at kill zone times from 6 a.m. to around 9 a.m. UK time. Now we're going to be mainly trading Forex pairs and we're going to have a 3-step method which I'm going to go into in a second. And lastly, the time frames we're going to be using are the 15-minute, the 5-minute and the 1-minute time frame. You don't need to use the higher time frames, but again, I would recommend having a daily bias or having a directional bias, as you cannot go wrong with a directional bias. If anything, it's an added confidence. I would always recommend having an overall bias. Some of you may have seen this diagram before. The New York midnight opening price trades above. As you can see, after price trades above this New York midnight opening price, we get a sweep of liquidity. We also get a break of structure or a market structure shift. It's essential that we find displacement in this area, and then we get a retrace and a couple more retraces before we move to the low of the day. So as you can see, we're going to be aiming to catch this high of the day. And you might be wondering, well, it looks good on paper, it looks good in theory, but how do we trade it in the real live markets? Well, that's exactly what I'm going to show you in a second, and vice versa. For this example, as you can see, price dips below the opening price, takes this low out, takes the high out with displacement, and it's key that we see displacement on any break of structure or market structure shift. And we're going to go into why a lot of new traders fail when they're trading ICT concepts later on in the video, so make sure you keep watching till the end. And then as you can see, we get that retracement, a second retracement, and then price moves to make the high of the day. But as you can see, we're going to aim to catch the low of the day in a bullish environment and the high of the day in a bearish environment. So let's get straight into it. So from 6 a.m. to 9 a.m. we're going to be looking for the trades. We're looking for the high or the low of the day to be made in this time window from 6 to around 9 a.m. Now we're going to be looking at the Asian session for this range. Now specifically, we're going to look from 12 a.m. UK time to 5 a.m. UK time for our Asian range. And also, if you want to get your trading view charts in the UK time zone, all you have to do is click here and look for the London time, and that will show it in the bottom right corner right there. So from 12 a.m. to 5 a.m. UK time, you're going to see a consolidation. Why? Because there's lower volume in the markets. There's not as much liquidity trading at that time. What's going to happen is there's going to be a buildup of liquidity outside this range. So as you can see for this example right here, we're going to see a buildup of buy-side liquidity resting above this range high and a buildup of sell-side liquidity resting below this range low. So the sell-side liquidity below the lows and buy-side liquidity above the highs. Remember, we don't need to overcomplicate these ICT concepts. I see a lot of people online complicating and overcomplicating all of these different ICT terms. All you have to do is stick to the basics and keep your charts clean. Now, as you can see, price has made a buildup of liquidity right here. Let's say around 6 a.m. price decides to sweep the liquidity in one direction. So if price sweeps the lows, we're going to be looking for it to reverse in the opposite direction. If price sweeps the highs, we're going to be looking for it to reverse to the downwards direction. Now, you might have heard this before and you might see it on the charts and say, price swept the highs, but it carried on continuing, moving to the upside. Well, we're going to go through that on the live market example. So make sure you stick around till then because we're going to explain that. Now, as you can see, once price has swept those lows right there, ideally on the 15-minute time frame, we're going to be looking for a PD array for price to tap into on the left, such as an order block, breaker block, fair value gap, that sort of thing. If you haven't already watched my breaker block video, I'll leave it linked in the description below, so make sure you go ahead and watch that if you haven't already. So once price has taken out the low on the 15-minute time frame, we're going to scale down to either the 5-minute time frame or the 1-minute time frame. The most common setup is a sweep of liquidity and then a break of structure. Now we're going to look for the true break of structure. How do you differentiate between a true break of structure and a false break of structure? A quick way to simplify this is to look for displacement, especially in this area. We want lots of bodies closing above this structure. We want price to show a willingness to move to the upside, to move in our direction. Now, as you can see, after price has broken structure or made that market structure shift, whatever you want to call it, we're going to look for an order block. Now, you can look for the earliest fair value gap and enter and then place your stop loss below the low. But if you want to refine your entries, again, this isn't a rule that ICT has said, this is just a refinement. You can just look for an order block and simply just trade off a basic order block on the 1-minute time frame if you want it as easy as possible. place your entry at the top of the order block and place a stop loss below the low, and then target the opposing liquidity. Now, the opposing liquidity doesn't always mean just this 1 minute high or the 5 minute high right here. No, we could target that overall liquidity that we made in the Asian range. That buy side liquidity, that untapped liquidity is what we're going to be targeting. So here's where we catch our entry, and then we target the opposing liquidity, increasing our risk to reward, because we found our 1 minute entry, but then we're moving up to our 15-minute targets. And this is the power of refining the time frame. If you want to get funded 100% guaranteed and you don't pay a single penny until after we pass the challenge for you, our automated trading bot will pass the funded challenge for you, get you on that live funded stage for you to start making real profits. Don't waste time failing your own funded challenges. Don't gamble your money away blowing these funded challenges, because there's a higher chance of you failing that challenge than you are to pass it. But with us, it's a complete 100% guaranteed pass at the funded fast service. We've been doing it for the longest time. We are the most trusted and reliable in the industry, and we have the fastest passing algorithm in the industry. As you can see, if you just join this group right here, the Funded Fast Service Telegram group, will walk you through everything you need to know. All you have to do is message Funded Fast on Telegram to get funded. It's a 100% full money back guarantee, so it's a zero risk investment. If we fail your funded challenge for whatever reason, we've never ever failed before, but if we do for whatever reason, you're guaranteed a refund, what you paid us for the service and what you paid for the challenge, so you cannot go wrong. And the best part is you don't pay a single penny until after we pass the challenge for you. Until you see the results for yourself, you don't pay a single penny. We've got endless results, proof and testimonials on this channel right here, so make sure you go ahead and join. I'll leave it linked in the description down below. And don't forget, you also get added to the Signals Room for completely free. And also in the Signals Room, we're on an insane win streak. We're on a 60+R win streak. In the Signals Room, members also get access to my weekly market breakdown videos. So make sure you go ahead and join the Signals Room for $30 a month if you haven't already. We're killing it in the Signals Room. Every day you take profit is being smashed. Literally, you guys can go ahead, scroll up, backtest these trades when you join and trade with us live. So make sure you go ahead and join. Literally $1 a day, $30 a month. You cannot go wrong. You also get access to my weekly market breakdown videos every single week. As you can see, I send my chart markups as well. We've been on a win streak for over a month now, a 60+R win streak. We're absolutely killing it in the Signals Room. So go ahead and join. And also remember to get funded 100% guaranteed, and you don't pay a single penny until after we pass the challenge for you. And these are some results from the people in the Signals Room that are absolutely killing it. So go ahead and join if you haven't already. Join the Funded Fast service. And also, as you can see, one of our clients made $10,000 in his first withdrawal from a 200k account that we funded for him. Absolutely killing it from the Signals Room as well, because they also got added to the Signals Room after we passed the funded challenge for them. As you can see, Samuel made another $2,500 withdrawal from a 200k account that we funded for him in literally minutes. Go ahead and join, guys. It's the golden opportunity for you to start making real profits on those live funded accounts. If you're sick and tired of failing these challenges, and if you keep throwing money away to these prop firms, go ahead and join the Funded Fast service group. We will pass your challenge today, guaranteed. Message Funded Fast on Telegram to get funded. Okay, so on the live market examples, I'm on Euro USD and I'm on the 15-minute time frame. I've got this box marked out with the indicator called Asian session high, low, mid lines if you do want to use it. I've got the time from 12 a.m. to 5 a.m. right here. So all we're going to do now is on the 15-minute, wait for a sweep in either direction. Now the market conditions for the setup is ideally, I like the market to be trending. So in this example, as you can see, we are trending to the downside. Price is making lower highs and lower lows. We have got bearish institutional order flow right here. So it makes sense for price to sweep this buy side liquidity, which is resting above this high in this range. As you can see, we didn't have much volatility during this time from 12 to 5 right here, hence why there's buy side liquidity resting above the highs, sell side liquidity resting below the lows. As you can see, we have relatively equal lows right there, showing that liquidity is resting below the lows and above the highs. So like I said, it makes sense in this market condition for this specific example for price to sweep the liquidity from this high, tap into some sort of PD array, and then drop and make a lower high right here, establish that lower high, and then continue in its direction to the downside overall, making that impulsive move. So all we're going to wait for on the 15-minute is one candle to sweep this. Okay, as you can see, we've got a candle sweeping that right now. We're going to drop down to the 5-minute. Is market structure clear right here? No, so we're going to drop down to the 1-minute time frame. Okay, so now that we found clear structure on the 1-minute time frame, let's break down what's actually happening. So as you can see, we have this high that's been taken out on the 1-minute time frame right there, and our next market structure shift low. As you can see, we have a fractal low right there, and if you just mark out the structure, this is our last point of structure that we're expecting to be broken if the market is moving to the downside. The only exception is if price makes a new low right here, a new fractal low right there, and then that will be the new market structure shift point. So now all we're going to wait for is a solid break of structure of a market structure shift. Now this right here, a lot of people will call this a market structure shift, but that's not true. There's no displacement here. It's not a sign that the market does want to move to the downside just yet. As you can see, there's not FVG in there, there's not displacement, but price has made a fair value gap with 1, 2, and 3 candles, so price could still break structure. Now this is going to be our new market structure shift point right here, and all we're waiting for is a break in market structure from here. Now, okay, as you can see, we've got a close below there with a lot of displacement. As you can see, multiple candle closures below this level. So now simply all we're going to mark out is this order block right here from the low to the high, and this is the only order block there pretty much with a big body, right? So this is where we're going to enter off. We're going to place our entry right here, place our stop loss above this high right here. Some people may have it above this high, which you can do, but if you want to just stick to the system and just stick to placing it above the high of the order block or the high closest to the order block, we'll place a stop loss above the high right there. So for this low, you could say we have an old low right here. We have relatively equal lows here with these two lows right there. Again, a bit of trendline liquidity right here, but overall the main target is going to be these relatively equal lows right here, which we marked out on the 15-minute time frame. Remember, 1 minute entry, 15-minute targets is what's going to give us that high risk to reward if executed correctly. So there's going to be sell side liquidity resting below here, so we want to target this low right here. So that's going to be our take profit for around a 1 to 7. Again, you don't always have to chase these high risk to reward trades. You could target at a minimum, say 1 to 1, and then after that, a 1 to 2, 1 to 2.5, start managing the trade, moving the stop loss to break even, etc. And then overall target that main opposing liquidity, which we found on the 15-minute time frame. So all we're going to do now is let price play out, tap into that order block, and let's see what happens. And as you can see, price moved up into that order block pretty much instantly, and then after price mitigated into that order block, you can see we had lots of displacement to the downside, almost pretty much clear run straight down to this opposing liquidity right here. And as you can see, following that market structure that we identified on the 15-minute overall, look how far price dropped after we took profits at that opposing liquidity. Again, if we were to target that 1 hour or 4 hour levels of liquidity, that could have been a possible 1 to 28 if you did hold it for that long, if you did watch price action at these areas right here, because again, we were pro trend, we were following the overall institutional order flow, which was to the downside, and that's how you can catch these high risk to reward moves. And let me show you another example. For this example, again, we're on Euro USD on the 15-minute time frame, and this is an example from the following day, actually from the last trade. So again, we've got our same time window marked out right here. We've got sell side liquidity rested below these equal lows here, and buy side liquidity resting above this high right here, relatively equal to these highs right here. Now this is going to be an example of where we missed the trade, where we missed an entry, because I want to show you some live market examples of where the setup did work and some where it didn't work, so you guys have a really good understanding of how the setup works overall. But again, like any other strategy you see online, definitely test it out yourself before you jump on the live markets, whether that's back testing, forward testing, live testing. Make sure you try it out yourself before you trade it on your own accounts. So as you can see, again on the 15-minute time frame, we're waiting for market to sweep in one direction, preferably to the upside, so then we can get a move to the downside, because price has made a lower low right here and we are in a bearish sentiment overall. So again, buy side liquidity is better to be swept first and then to target those lows overall. Now we just let price sweep the highs. So as you can see, price took that high out on the 15-minute time frame. Again, not clear structure on the 5-minute. Let's see the 1-minute time frame. Okay, it's not the clearest here again, so we're just going to wait for price to show its hand ready. So all we're going to do is wait, and a lot of people would be tricked out over here, because a lot of people would say this is a fractal low right here, this would be a market structure shift, but as you can see, there was a lack of displacement. Price didn't show a willingness to move to the downside. And then what they would do is mark out an order block like this order block, for example. They'll sell off this order block, place the stop loss, let's say above this high, and then target the opposing liquidity. But let's see what happens, because there wasn't a lot of displacement in this break of structure or in this market structure shift overall. Let's see what happens. As you can see, price pretty much instantly takes them out right there. In literally one candle, price would have taken their stop losses out. So that's why we want to enter trades only when there's a lot of displacement, when price is clear and obvious. You want to be selective with your trade setups. Don't just jump on any setup that you see. So now we're going to wait for a break of market structure shift, change of character, whatever you want to call it really. So all we're going to wait for is displacement. Now, as you can see, there was a lot of displacement to the downside right here, rapid move as well. So now what we're going to wait for is a retracement to the order block. Now you might be wondering, okay, well, which candle do I choose? Well, this as a whole is one order block right here. So this would be your order block. Let's see if price taps us in for an entry. So let's say we enter here, place our stop loss above the high, and then if we just place the opposing liquidity target on the 15-minute time frame, let's just see what price does. And as you can see, price is pretty much running away. Price moved instantly away from our level and didn't give us a chance to enter, and that's completely fine. Sometimes that will happen. Sometimes you will get swerved on trades. You have to learn to accept these, and you don't have to force every single trade. You have to be selective with your trade setups, and that's how you'll increase your win rate and your risk to reward. Okay, so for this last and final example, we're on the 15-minute time frame. Again, same time, same strategy, same rules. We're going to look for on the 15-minute time frame where the price moving overall, bearish institutional order flow. As you can see, we had a massive sweep on liquidity and a massive move to the downside. So again, here we can expect a sweep on liquidity and movement to the downside after taking out that buy side liquidity that we formed in that 12 to 5 a.m. window, in that Asian session window. So now on the 15-minute time frame, it's closed, it's swept liquidity to the upside. 5-minute time frame, okay, not clear structure. 1-minute time frame. Now we're going to look for displacement to the downside. Quite obvious to see. Okay, we have a low right here. Price made a failure swing right there, didn't take out this liquidity. What we're going to look for now, displacement, willingness to move to the downside. So we'll let this play out right here. Okay, we've got multiple candle closures below this area right here. We've got lots of displacement to the downside now. So all we're going to look for next is a retracement to the order block. And the order block that I'm going to use for this example, you can use this green candle right here. But for this example, I'm going to use this large body candle because they're the most reliable order blocks. So now we're going to enter right here, place our stop loss either above the order block or above the high right here. I would recommend putting it above the high when you're selling and below the low when you're buying. Again, target the opposing liquidity. So 1-minute time frame, we got an old low right here, relatively equal lows here, and equal lows pretty much right here on 15-minute time frame from that Asian session range. And this would give you around a 1:7 risk to reward ratio. So now all we're going to do is let price play out. We place our trades, we're in the trade right now, we place our stop loss above the high. So all we're going to do is literally just let price play out. Okay, as you can see, it's gone deeper into the order block right here. It did tap into this candle right here to be specific, but it's completely fine because our stop loss was above the overall high and price didn't even take out the high of the order block. So if you place a stop loss above the order block, it would have been completely fine as well. So now all we're waiting for is price to move to our take profit area, and at this point you can move your stop loss to break even or manage the trade, secure some profits even. Okay, so at this point price was tapped into the break even area if your stop loss was at the break even. But why did price tap there? As you can see, we had a second market structure shift and we also had this order block right here. So for this reason, if you did see this in real time, you may have left the trade with the original stop loss or even a reduced stop loss above this high right here, because our stop loss is above this high now, because don't forget we have this second market structure shift. So we have a new structure right now. So you could reduce the stop loss instead of putting it to break even. If you put it to break even, that's completely fine as well. You would have been out risk free. But let's see how the trade plays out now. And as you can see, price took out the low right there, taking out that 15-minute opposing liquidity. If I just go up to the 15-minute time frame, you can see it took out those Asian lows on the left right there. So again, just a reminder, don't be too greedy with your take profits and manage your trade correctly. Join the Funded Fast Service group in the description below. Join the Signals room if you haven't already. Literally $1 a day, $30 a month. You cannot go wrong. The value you're getting in here is absolutely crazy. So go ahead and join. The Funded Fast Service group will also be linked down below, so make sure you go ahead and check that out. Follow me on my socials. My completely free community will also be linked down below in the description. Make sure you go ahead and join. So remember to stick to these rules, guys. Around 12 a.m. to 5 a.m. is where we see the Asian range build up. Around 6 a.m. you will start to see a sweep on liquidity from the 5 a.m. highs or lows. And also, if the sweep doesn't happen at 6 a.m, keep an eye on the London open liquidity sweep at around 7-8 a.m. So again guys, don't rush trades, be selective with your trades. If a trade doesn't show up or if you get swerved, don't rush your entry. Just be patient with the trade, be calm. A setup won't show every single day with the strategy, but when it shows up, it's very high probability because again, we're being selective with our setups, we're being specific with our entries. That's all for today's video guys. I hope you guys found this insightful. I'll see you in the next one. Peace.